Hey everybody, welcome to Mortgage Meet, marketing, education, activities, and tips for mortgage loan originators. Today, I got my buddy Kamran AKbar. Welcome to the show.
Thank you for having me, Keith.
No problem. Quick history, Kamran's been in this business for almost 20 years. This guy started when he was only, 17, 18 years old?
17 years old,
so
out of high school.
That's a good time to start. Any of you have kids at home that need to start, thinking about a career, maybe they got to start listening to Kamran.
Yeah, well, it's good. I got into it by, not by choice, but then just never left. So it was a good find.
Yeah.
Yeah.
Well, this is Mortgage Meet. So we always like to start off by asking everyone a couple questions.
Okay.
I think you know what they are. Your favorite steakhouse?
Actually, it's Northwoods.
What's in, dude? Snow on the roof?
Snow on the roof. It's low key.
Yeah.
It's not like the big fancy places that most people like. It's, we go there often, so it's one of those. We love the steak, the salad.
What steak you get there?
The ribeye.
Oh,
I think it's the filet.
I say you said ribeye like there was no other choices.
Yeah, I like the ribeye, but over there we get, I believe, the filet and lobster combo.
That's nice.
Yeah.
I'm hungry.
It is. But they give you enough stuff beforehand where when it comes to the food, you're kind of like, so me and my wife always do like, they have the split thing where we get like the steak and the lobster, but we probably eat about the same quantity of the salad and the cheese breads they give you. So by
the cheese bread is the bomb.
Yeah. And I like their cheesy butter that they put on the baked potato. That's probably one of my favorite things.
They still throw the peanuts all over the place?
Yeah, you do. Well, you throw the peanuts all over.
Yeah, but I thought like at one point they quit doing that, but you could do that, right? That's a fun part.
Like a COVID thing or something, not trying to spread people's germs where you're throwing, your...
who the hell was eating the peanuts off the floor anyway?
I don't know. Somebody's got to clean them up, right? Somebody's got to clean them up, so they're probably... I don't know. Yeah, you still throw the peanuts at the table, at the floor, wherever you feel like it.
Good times. Well, I'll tell you what, that's one I haven't heard of in a while, and I love going to that place too.
Oh.
So, you know what, we were talking before the show and really love your story. And we've been friends for a long time, done business together a long time. And I just thought it'd be really cool to share the story of really about what got you in the business and how you've gotten to the level of the success you've achieved, which is pretty amazing for those who know you. So maybe just tell us on how it started.
Well, I actually, like I said, got into the mortgage business by accident. Out of high school, I was going to college, doing a part-time job at Panda Express, working the drive-thru. And one of the guys there tells me, hey, man, I got this great opportunity lined up. And, you make a ton of money. Ton of money to me was like $4,000 at that point. I was like, dude, rich, making $4,000 out of high school. And it was a sales job, but I didn't know it was a sales job. So long story short, I go, get hired, first day at work, thinking we're going to LA. We're going to go to this big, fancy U.S. Bank building. I'm going to be on the top floor. Yeah, that wasn't the case.
Not that part of LA.
Not that part of LA. They forgot the South Central part of the LA. And I still remember my first day, we get dropped off on 103rd and Grape Street. Don't know where that is, that's a good thing, because I wouldn't go there in today's environment. Why in any environment? And
mind you, you're like 17 years old,
17 years old. That time, actually, I was 16. Because I did that job for about a year and a half. I graduated early, so I was 16 years old when I graduated high school. And I was 16 when I had that job. And I had my mind made up. I was like, I'm never coming back to this place. I'm going to quit the moment I go back, and I'm going back to Panda Express. But they were paying us $50 a pop, and I ended up selling 10 cable my first day, and I was like, $500 today, dude.
Yeah, I don't think we mentioned that you were working for a cable company, right?
Yeah, it was a cable company. Sorry, I forgot to mention. It was cable selling door to door.
Easy peasy.
Easy peasy. There was no leads. You just got dropped off and you knocked on the door. So,
I think we should try that nowadays. Get a bunch of LOs, we'll just get a van, and just drop them off and knock on doors.
Actually, I tried that when I got in the business. I figured that'd be a good idea. But apparently, phones work better. So yeah, I was just doing door knocking. Did that for about a year and a half, ish. And one day, I made the mistake of really telling my mom, where I worked and what happened at work. We were working one of these projects off the 105 freeway and Long Beach Boulevard, and my partner gets mugged. And he had these two kids come up. I call them kids because they look very young. Put a gun out to him and took his wallet, cell phone, everything. And I come home and I tell my mom, I'm like, you won't believe what happened to work today. And as I'm telling her short, I see her facial expressions start to change. And I'm like, shoot, maybe I should stop telling her this story.
Well, probably not the story. As parents now, right?
As parents now, I was thinking she would be like, oh my God,
you're so brave.
Yeah. No, she was like, you're not going back to work. That's not what I thought you do.
Yeah.
She knew I worked in LA, but she didn't know what parts of LA. I think she probably thought I was working in the big US Bank building or the fancy buildings. So, we kind of bickered over it for a couple days. So this is where I get into the mortgage business. We were actually in the process of buying a house.
Okay.
So I'm like, okay, well, we're going to lose my income and my contribution. Then maybe we should put that on hold. So the loan officer that we were dealing with at that time, she tells him like, hey, we're probably not going to buy right now because he needs to find a different job. And, we're banking on some of the portion from him coming. And that was the beautiful mortgage industry back then. He had no idea what one of us did because he's probably doing everything, stated. So he's like, well, what do you do?
What do you mean you need a job,
So I started explaining to him and I go like, hey, I sell cable door to door. And, that's what I do. So I was like, he thought like, oh, so people go online and apply and then you go see them. I was like, no, nobody applies. You just show up. And he just looked at me and he goes, okay, so random people, you just show up to their door and you convince them to buy cable. Yeah. And he goes, okay, well, you're hired. You're coming tomorrow. And funny thing was he had opened up his own brokerage in Upland. He gave me an opportunity. That's how I got into the mortgage business.
That's pretty awesome. And the thing is, I think what a lot of people can learn from is, I think what we have to realize, we learn from all our experiences along, right? And hopefully we can stack those. For me, I started waiting tables and then I worked at the Good Guys, which was kind of like Best Buy, Circuit City back in the day.
Right.
And every little thing we learned along the way, we implement now.
Yeah.
I would say this, the Good Guys had the best sales training out there. They flew everybody up to, I think it was like San Francisco once a year. You learned about all the products. It was really, really a cool place to work at the time. Shout out to them, but they're not in business.
Yeah.
But I honestly, to this day, I think they taught us how to match and mirror. They taught us how to posture.
Right.
And all of that stuff comes back. So, looking back on that, what was maybe the one thing that you picked up from the time, selling cable that you think was really a strength going into the mortgage business for you?
It was reading people's body language, reading people's, just emotional intelligence, I would say.
Mm-hmm.
Because one of the things when you're making calls and you're always just on the phone, you kind of sometimes miss that piece, right? Like, because you're not picking up how people are reacting to what you're saying.
So you're saying when you're in person, you get to see more than just being on the phone.
Exactly. It's kind of more of a crash course because they're doing the same to you.
Yeah.
Right? So, on the phone, you could be whoever. You could be hey, I'm the president of underwriting calling you. I just approved your loan, whatever. But when you're seeing them face to face, you really have to carry the conversation in a manner where that trust continues. So I think that piece really helped because I would be able to read the situation a lot better, sitting with clients, meeting with clients, talking to clients. I think that piece came a little easier than some of the other people that were newer in the business with me. That it would actually make them nervous. And to me, it was like, okay, let's sit down and let's talk. What do you want to do? You want to buy a house? Are you going to refinance at this 8% interest rate that I'm giving you with a 228 and 2-year prepay or not?
The good old days.
Yeah, the good old days. What do you mean?
Execute at 105.
Yeah, it's like 4 points on it. Yeah, that's what the standard cost is. You go AmeriQuest, they charge you 2 points even more than that. So, anyways, it just made it easier. It was just a conversation. The fear of it being sales, or having to sell something, kind of wasn't there for me. It was just, okay, I'm going to do the same thing. I'm going to have a conversation. This is what's available. Does it work for you or does it not? Right? Because that's kind of how you have to do it. You can't walk in and be like, oh my God, you should cut cable today. Totally. It's like such a great idea. It's like,
you can't afford to eat, but you should spend $50 a month on the cable bill, right?
Right. So
whatever it was there.
Exactly. So it would just be like, hey, here's what I got. Here's what we can do. You pick up on where the need is. You see a bunch of kids on the floor, crying. Hey, they could be watching cartoons while you're doing this. So, you pick up little things of how to make it work. So I think that's probably the most valuable thing that I learned, that I think had I just did phone sales, it would have probably taken longer to acquire.
Yeah. And I've always been a fan of the face-to-face.
Yeah.
Right? I mean, to me, I don't know what it is. Some of you can read the room, you can see people, mannerisms. And hopefully, for me, it was always trying to make something funny, right? Try to find something kind of lighthearted in it a little bit, but
people buy from people, right? So when you're in front of them and they see this is a live person, it's not a bot. In today's technology, this is not AI that I'm talking.
Yeah. Today, that's even more of a concern, probably.
You have a whole conversation. You're like, oh, this is a really nice guy. No, it was a bot. You didn't even talk to anybody. You really didn't speak to anybody. Yeah. So.
Yeah, that's kind of that's a whole other thing. I mean, we even use AI to come up with some of our show notes and stuff, right? But well, that's pretty cool. One of the things I was going to say too is when it comes into the face to face, I don't know what it is, but some people have this fear of talking to people, and I just don't get it, because I look at it like this. You were in a very real situation where people there were gunshots in the background, right? I remember hearing one of those stories. Lady pulled you into the apartment, right? You got people that got robbed, straight beat up. I'll tell you, everybody, I never had, when I was a wholesale rep going and calling on brokers, no one ever kicked my ass. You know what I mean? It's just never happened. Maybe it should have. I don't know. But walking into an office, what's the worst somebody's going to do? You know what I mean? It's like, so at least you were prepared for that.
Yeah, absolutely. I think being young kind of helped.
Yeah.
Because I would have probably reassessed my options, knowing what I know now. Somebody offered me that position, I'd be like, well, these days you probably make like $20 an hour working at a restaurant. Like, I'd rather take that, dude, instead of getting shot up. But
might get some tips too.
Yeah, exactly. So I think being naive and hungry were the two positive things that were working.
So one of the things that I wanted to touch on was, selecting your cut. We always have our fun things, but identifying your niche. As you grew into the business, is there a certain market you went after, or how did you develop that?
So, solving the puzzle was always intriguing to me. And what I mean by that is getting one of those tough loans and seeing it through and figuring a way out to making it work was always something that intrigued me. And over the course, I became better and better and better at it. That was really my niche. That it was kind of like, okay, if Cam says no to it, my referring partners basically felt, okay, I don't need to waste any more time on it. Yeah. It wasn't one of those things where they're like, okay, let me call the guy next door. Let me call the guy, 10 blocks down and keep going through the list. They felt that, all what could be done was done. And usually we would never say no. We would be like, hey, not right now. Here's the steps you need to take to get up to the position. need to. Um,
So developing a niche within challenging loans and leveraging that.
So when I was, when stated went away and we had to learn how to look at tax returns.
Had to learn how to actually prepare a file for underwriting.
Actually, I remember, it was a conversation we had selling subprime loans, and somebody mentioned something about FHA. That is what is an FHA? Yeah, like and talking about rates and this. I'm like, those things don't exist. Like, let's move on to the 228s. If you want an option arm, which one is it, right?
Yeah.
But you learn through the process of trying to get out of your comfort zone. And one of the things I started doing is, I didn't really know how to even approach realtors because we didn't really work with realtors. We would call on leads. That's kind of the shop we were. Before the mortgage crisis in 08, 09. And then we realized, okay, the leads.
06 was really good, man. I loved 06.
Yeah, it was easy, right? You picked up the phone, everybody in 6 months had another $100,000 in equity and wanted to, do more stuff to the house. And
Lamborghini sitting in the, in the yard.
Right. But once you started going to the agents, so there was the listing agents that were getting all the REO business.
Mm-hmm.
I didn't know any of them. So I'm like, okay, well, how do I get my hands on the buying agents? Because they don't have to be the big shots and have all the relationships with the big asset manager companies and things of that nature. So I would basically walk in and say, let me see your turndowns. Yeah. Right? Let me take a look at the files that maybe whoever you're working with today couldn't get it done. And let me see if I can make that work and I can put an extra commission check in your pocket. And some of the times it worked. Some of the times I'm like, he's right. This one does not work, right?
But you know what's cool about that, I think, and even we deal with in our business, is if you see someone trying, even if it doesn't work, but you see that effort as salespeople,
right?
You want to give them the next deal,
Well, it gets you in the rotation, right? Yeah. So at that point, if they took their time to give me a turn down file, I'm one step ahead of the person who just walked in through the door, right? Now it's on me with my follow-up and persistence and all the other attributes to find my way to move up. Now, if you ended up finding a deal out of the one that was turned down, well, then you just, fast-tracked your way up because
you probably piggybacked a couple people in rotation if you saved the deal.
Because you also put doubt in their head now, right? Because now whoever they were working with said, oh, it can't be done, and you got it done. Now they're wondering, oh my God, how many clients did I lose that way?
Yeah.
So you now probably become the second call. Or if they're pissed off enough where they're like, oh my God, I was going to lose this client, you might become the first call. Yeah. So that's really how I started.
So just to kind of paraphrase, so you started, going into realtor offices. Mm-hmm. And I think you made the comment, or maybe we've discussed it before, you weren't going for the realtor that was doing, every single deal because everyone was hounding them.
Right.
But you were kind of going for the ones that were a little bit in the middle of the pack, right? Offer them exceptional service, save a deal or two, get yourself into rotation as the fixer if you get it done. And then from that, how did you develop a team and what comes next?
So, it started to work, basically. We started building relationships.
Take note, everybody. If things work, do them again.
Yeah, exactly. So we kept doing it. And then I realized, okay, I've got limitations, right? If I'm going to go down this path, I can keep the whole pie to myself, but I am only going to have this much of a pie, right? So if I want to do more, I needed some help. So then I started getting an LOA. Then we started getting, so I had my dedicated processor. So you started just moving up the food chain in regards to, first step was getting the help, and I would share a processor with everybody. Then the volume started becoming where, okay, well, they don't have enough time to be able to do everything. So then made the change of bringing on another processor for the rest of the team. I had a dedicated processor. Then it was like, okay, how do I free up my time to be more out in the field? Right? And that piece takes building systems, but also having the right people around. So at that point, I brought on a production manager
Uh-huh.
who basically manages my production. In most cases, that's probably another licensed loan officer that knows the structuring and things like that. But that's not necessary, right? Depending on what and how you're running your team, how hands on you want to be, those all things make a difference, right?
Yeah.
But I would say um, the more you can invest in your business, the more of a return you would see. A lot of people kind of, go with, hey, once I get my production up there, then I will do that.
Yeah.
Generally, it needs you to make an investment first. You need to carve out a process. You need to make an investment as far as bringing on the help, right?
Well, I remember sometime back, so we've done business together for years. You were at a point of production. I don't remember the number of units during a month, but you were at a point where you had one processor, and that processor was getting overworked, not really ready to support
Right.
the cost, right? I mean, we work within budgets, a business, right?
Right.
A second processor, and you knew I had to do how many units you had to do, and you did it, and how did it work out, right?
Yeah, it was, you have to break your numbers down. Obviously, what we basically thought was, hey, we got up to, if I had 20 loans a month, I could get it done with a processor and a LOA or production partner or whatever the term you go with. Once you start passing 20 loans a month, it starts to get into where, again, for our system, I needed more help. 20 fundings, because that means you're probably working on 30, 40 loans, pre-approvals, things of that nature, especially if you're working with agents. That's usually, a purchase transaction means you have to keep three parties informed. You have escrow, you have the listing agent, then you have the buying agent, and then you have your client.
Yeah. Yeah.
So
let's not forget about the client, right?
Right. So it's a lot of conversations, a lot of people. If you want to do a good job, everybody needs to be on the same page. Everybody needs to know what's going on. So, yeah, that was probably the best thing I did, is bringing on the additional help, because it allows you to work more on your business than in your business.
And I think the one point for anyone who's watching, we're talking about building a purchase-based business,
Right.
which is the consistency. Look, there's going to be times rates drop. We'll get refi booms. And no doubt there's people that have crushed it in that come in and out of the market, know what they're doing, and they only work in those cycles. But for most of us, I mean, this is our career. And how can I do this today, be a little bit better in a month or two, be a little bit better and stable. Right. So the purchase, I don't think anyone would disagree. The purchase segment is the way to go, but it does take teams and systems.
It does. And here's the thing: your purchase business is going to become your refi boom, right? Because think about it. If they trusted you to get you in the house, there's a very good chance, if you do a good job for them, that they will trust you in doing a refinance down the road, whether it's lowering the interest rate, or pulling money out, or whatever, any other transaction for their friends and family and kids and whatever the case might be. So it ends up becoming your refi boom and a referral source for multiple transactions.
So we're talking about developing a team and systems. What about developing yourself? How do you look at like your own professional development? Maybe things you could share that you've done along the way.
Yeah, so that actually is interesting, because whenever I thought early in my career that growth meant more sales, more numbers, more dollars, right?
Yeah.
Which, if you start to really think about, if you start investing in yourself, and what I mean by that is, if you're growing as a person and learning more about the business, about yourself, and about, picking up good habits and the do's and the don'ts, the growth of the business and those sales become a byproduct of that. And
Do the actions, results follow.
Right. Correct. Yeah. Right. So you don't have to beat the drum about, hey, how many loans did we get? What did we fund? When you know what habits yield you the best results, right? Yeah. So if you put your action plan or you put your business plan together and you're measuring some, the KPIs, like some of the people call them. If you're on top of that stuff, the sales will come because this is a numbers game. This is not rocket science, right? So if you're doing the things you should be doing and you're growing and you become better at them, sales will just become a byproduct.
But I think one of the things too is that when you start looking at professional development, right, it seems when I was younger, I thought I'm going to read a book about somebody else. I've always been a great salesman. I always did good, right? And then you start realizing, well, the people that are very successful read books, they research, they learn from others, right? The smartest person realizes they don't know anything, right? I think that was some philosopher. We never check anything here at Mortgage. But I think it's pretty interesting too, is to think about if you do the actions and you know what they are, you're going to succeed. How many times have you seen somebody that, not to pick on people, but I've seen people in my career life that I'm like, I don't feel like this dude's that sharp, right? Mm-hmm. I'm smarter than them, but shit, they're killing it. They're doing something right. And they're following, they figured out what tasks they got to do. And they don't care about any of the other noise. Doing this task, I do 20 calls, I do 5 visits, whatever I got to do. They just,
well, part of the growth is, you figuring out what are the things that yield you the best results. And that doesn't necessarily mean you have to be the smartest at them. Right? Yeah. You don't have to be the best at them, because what works for me might not work for you, but what works for you might not work for me. But if I'm, if I know what those are, then I can just do more of those.
Yeah.
And one of the things, we talked about reading, they bring things to mind that may take you a long time to figure out on your own. Mm-hmm. We talked about a book that I believe both of us were reading, The 7 Habits of Highly Effective People.
Oh, yeah. I was looking down here. I've got a lot of books on the shelf, speaking of reading. Right?
Yeah. So, you start reading it and as you're talking about the squares of where things go.
Yeah.
As it's talking about, if you're, reacting to things, if things come up every day on your plate and you're having it,
and I thought that was the important square. Okay, we got to live in that square, right?
That's what I was like. I'm like down in my chest. Yes, that's me, and then you start reading it and goes,
but that's not where you should be.
That's not where you should be, right?
Yeah.
That means you're not doing things that you should be doing beforehand, because now it's bubbled up to where it's become urgent and now.
Yeah.
If you catch it in the important category and you do it ahead of time, certain things will still come up. We're in the mortgage business, right? It's just going to come up, right? But you might have less of that, and you'd spend less time doing that as opposed to putting out fires all day.
Yeah. I think the one thing that I've always found interesting too is in this book we have here, right, that we've been sharing with a lot of our clients, right? How to win friends and influence people. This thing's like 100 years old.
Right.
It's bananas, right?
But
if you read this book, quick shout out, Dale Carnegie, guys, but you could read that book today.
Yeah.
And pick something of value out of it and swear, I think it's like from 1930 something.
It is very old. There's like 2 versions, but they're both about, they're very old.
So I think that's just crazy. And, if you're not focusing on self-development, then you really, really got to decide, is this your career? I mean, is this a job and you're just going to float through it? Or do you really want to build a business out of it?
Well, you're really at a disadvantage, because somebody who's investing in themselves will learn it a lot quicker and might get ahead way quicker, right?
Yeah.
If you're not investing in yourself, then you might eventually learn it. You might eventually get burned enough where you go, I'm not going to do this again, right?
This didn't work.
This didn't work. But somebody else could say, oh man, I read this book and there's a great idea on that. I'm going to implement it. And then you start seeing the results and you're like, okay, that took me like 6 weeks to do that. Might take the other person 2 years, 3 years, 6 months. Don't know.
Right. Yeah.
So I think you really shorten the learning curve by doing that.
So let's talk a little bit about, right now, how do we grill the competition, right? Because everything here is mortgage. How do you grill the competition? How do you stand out in a competitive market? I mean, right now, we're coming out of I've been doing this almost 30 years. I've seen two horrible markets.
Yeah.
This probably would be the third. And we're just coming out of a very, very tough time. By all means, this year's already getting better. We see our clients doing better. What would you advise to someone how they might be able to differentiate, or how have you found ways to stand out?
I think your systems, your service are the only thing you can bank on. Yes, rates play a factor. Obviously, you can't be way out of the market. But it felt like COVID kind of, blinded everybody. People just thought having a phone was enough because it kept ringing and you'd answer the phone and somebody either wanted to refinance to a 2% interest rate or wanted...
Can't wait till those come back.
Right. But people forgot about any systems or things of that nature. It was a good survival mode, which was, hey, I just got to be able to get this volume out the door. Right.
Yeah.
Now that the business is not like that, the people that stand out are the ones that are polished in their way of handling the business, the systems they put together, and ultimately goes back into the growth piece, right? The more you put in your business, the more it's able to give back, not to you only, but to your referring partners. So that's my philosophy in this kind of market, and really any market, is what kind of systems do you have? How well do they work? If the only thing you're going to sell rates, then yeah, that might get you a client or two, but how many clients did you lose through the way?
Yeah.
Because your systems weren't tightened up.
Well, and you have something you call Team 100, right? Tell us a little bit about that.
So Team 100 was something we came up with. We were closing a good amount of loan, and we set a goal for ourselves to get to 100 closings a month. I think the best month we had. So really, Team 100 was me and the supporting staff, and we closed. This is again COVID numbers, but we closed like 40.
We have a little disclaimer. We have COVID numbers.
Yeah, I'm not saying we're doing those numbers today, but we closed 42 transactions, in 1 month. For one loan officer, that's pretty good.
Yeah, really good.
So we set a goal. We called it Team 100 because our goal was we need to get to 100 transactions, 100 fundings a month. And that's what Team 100 was, or is. Then the volume started changing, and we still kept the name Team 100, but that's our goal to get to, is 100 closings.
So what kind of activities? I know that you guys have regular meetings and things. What kind of actions do they do?
We have bi-weekly meetings at this point. When we started, we were doing weekly meetings because we were building the systems, right? Now they're bi-weekly. One meeting is meant for training purpose. So, we figure out what the need for the team is, what are the things we're struggling with, if there are any. And now what we've done is we've added more people to the team. So some of them, they're still learning a few things. And if they need help, we kind of open that day up to, okay, what would be helpful for the team to learn when we're out in the market, right?
So you're looking at product knowledge.
It could be product knowledge. It could be, some of the time it could be role play. Hey, I really didn't know how to handle that situation last time it came around, and I would like some help. So it might be some role play.
Yeah.
How do you pick up the phone and ask for business from a referring partner without asking, like, hey, can you give me somebody who can give me a loan?
Yeah.
Right. So part of the conversation is, which a lot of people don't do enough of, is asking for business from the people that already trust you with the business. Right. So think about it. If there's a realtor or a team that already gives you the business today, when's the last time you picked up the phone and told them, hey, man, you know how we operate. Who do you think will benefit from our services in your circle today?
Yeah, I mean, now we're talking about asking from referrals, not of a client, but of another referring partner.
Right. So if you think about it,
you do.
Right. Think about it. If you know what my service is like, who do you know would benefit. So the way you're structuring that conversation is, hey, this is going to be not just beneficial for me, but also to the person you put, because I am going to bring value to the table in the systems and the processes I've created, right? So things like those. And then the other meeting that we have is accountability meeting. We go through our numbers, action plans, things that we want to get accomplished, things that we have said we are going to do. We put it on an action plan, and then basically hold it.
Let's talk a little bit about that, right? So a lot of us start out the year. It's usually when people think of saying, hey, I've got these resolutions, or maybe I said these target goals.
Right.
And then, months go by, we're already in March, which is kind of bananas, right? So how would you tell somebody today, or maybe not tell, but advise to set some of these goals and trackers, and maybe any systems that you've used for that?
Well, the biggest thing is, if you have these thoughts, let's get them on paper first.
Okay.
So a lot of people have these great ideas, but they're locked in here, or they're locked in here. Let's get them on paper first. Beginning of the year is always a great time, but that's not necessarily the only time. Is you put your goals for the year on the on a piece of paper that we call an action plan. You can call it whatever, your business plan. But then you've got to break them down into quarterly or monthly goals, right? So if I'm saying I'm going to close 100 transactions, or get back up to, or get to closing 100 transactions a month, well, what are the goals along the way? If I'm not closing 100 today, what's the next step? So if we're closing 20, okay, how do we get to 30?
Yeah.
Should we be 30 by the end of first quarter? Yes. Okay, so we're going to put that. What is going to change from today? Are we just throwing a Hail Mary that the rates are going to get better and we're going to get more business? Or we're actually going to make it happen, right?
Sure hope rates come down.
Right.
We're going to get to 30.
So one other thing is tracking referral partners. How many referral partners do we have today? Okay. So one of the things was to get 100 referral partners to the team.
See, I actually thought that's what Team 100 was when I heard it. I thought it was 100 referral partners.
Yeah. Yes, but based off of, where the volume is, it's going to take more than 100 referral partners to close 100 transactions. So last time we tracked it in our meeting, it was at 73. So now we're at, so our goal is, okay, how many can we add in the next quarter? So we go around the team. Okay, David, what is yours? Danny, what's your goal? Tyson, what's your goal? Joanna, what's your goal? I put mine, right? And then as we're tracking these, quarter one, okay, well, you said you were going to add 7 more. You've added 0.
Is there a discrepancy?
What's working? What's not working? Are you working? Right? Those are the conversations. So a lot of these.
You said you're going to have 7.
Yeah.
But you have 0.
Right. So there's.
You actually lost 1.
Yeah. So there's 1 of 3 things that's happening. Something's not working right. What worked before, where you got to the number you were at? Or are you working, right? Like, are you putting really the time that it's going to take to achieve these goals? Because if they're just numbers, then they're not going to magically happen. You've got to make them. And that's, I think, what the difference is in today's market, is nothing's just magically going to happen. You have to make it happen.
Yeah.
And that's what I said about COVID, kind of putting the blinders on everybody. You didn't really have to make anything happen. You just had to be a breathing person in the mortgage business.
And not breathing on anyone, though. Breathing 6 feet away.
Right, exactly. 6 feet away. And you make, things were happening. And now it's back to a regular market where you've got to make it happen. And that's...
there's a saying that I know a friend of ours, Tim Cahill, says, and but you probably don't remember me, but it's things you track, or... What's his thing on that?
Yeah, it's basically whatever.
We're going to chop it up, Tim. Sorry.
Yeah, we're probably not going to say it in the best way, but it's basically whatever you track, the rate of learning. I'm going to change it because I think it's rate of improvement increases, whatever you track and report.
That's what it was. Yeah, it's whatever you track will improve, and when you track and report, it improves even more.
Yeah.
And that really comes down to when we had Tim Manford on, he was talking about accountability.
Yeah.
The guy gets up at 5 a.m. every day and reads his goals. And, 7 or 8 goals, reads them every day at 5 a.m.
Right.
Gets up and does it. So, accountability is huge. So,
accountability is huge. And, all of that does is basically speaking to your subconscious mind, right? So you got to believe it for it to happen, before it does happen.
So we talked a little bit about working with realtors, but when we talk about building strong relationships, so we're talking about we want to have 100 referral partners, 75 referral partners. But let's say that somebody's starting today and they have 0 referral partners. How would you advise them to get one, build a strong relationship, and grow from there?
I would say, so one of the things we did for the people that were newer is identify your top 5, top 10, okay. Right? And figure out your plan of what you're going to do and do it consistently. So if that means you're going to call them every Tuesday at 12, call them every Tuesday for the next 90 days at 12. When it's 12 o'clock, it should always be a given to them. Well, here comes a call of this guy that keeps asking me for business. So that the consistency piece is going to be crucial, because that's what people get attracted to, right? Is the consistency of things. Because if you can be consistent in pursuing them, then you're going to be consistent in pursuing the clients they give you.
Sure.
And that's one of the biggest challenges most of real estate, referral partners, whether call them agents or whatever the case might be. That's one of their biggest challenge. Hey, when I give you a name and number, how do I know we've exhausted all options?
Yeah.
So that would be one I would say is the biggest thing.
So identify a target group of 5, let's say.
Yep. And
start with those 5, and then create your plan. Would you mind sharing a plan that maybe you would tell your people?
Yeah. So one of the things is we have a lead tracker. Actually, Tim helped us put that together. So we have a lead tracker that has all the actions broken down for the 5 days. So Monday, Fridays are opening, contact. So Monday, hey, hopefully you had a great weekend. Any open houses, leads you want me to call on? Please let us know. We're here, to help you out. Tuesdays and Wednesdays are open for appointments and things of that nature. So if you have a site visit and things that you've planned out, and then Friday again, you basically let them know, hey, I'm going to be available. Any open houses, things of that nature. Now there is a plan to this, because you don't want to become that stalker that's in the office on Tuesday, texting him on Monday, texting him on Friday. For some
I'm the guy that's knocking on the window, and
right.
Hey guys, just checking.
Right.
I'm sorry, I'm at your house.
Exactly. So you there is a fine line of that, and you got to figure out. Now, one of the things that we were doing, which was a lot of people really appreciated, is we would send them a copy of a book we all were reading, kind of like a buddy read, and you write a handwritten note in there and say, hey, this is the book I'm reading right now. I think, you might get some value out of it. Here's a copy of it from us, and I will follow, I will touch base with you in the oncoming weeks or days or whatever the case might be.
Yeah.
That usually would throw people off. They're like, somebody just send me a book. Now they're almost curious, why'd you send me a book?
Yeah.
I think I'm not reading, or what is the reason you send me a book? So they're always...
Well, I'm curious when they send me diet books. I'm like, what are you trying to tell me?
Exactly. So they'll answer your call.
I'll take a sales book.
They'll answer your call just to figure out, well, why did you send me that book again? Obviously some of the people already understand, but it makes for a great conversation. You pretty much put your hooks on from there, and the consistency piece is what's going to take you to the next part. Things have, kind of, I would say, standardized for the most part. You could go the approach of let me see your turn downs and things like that. But I think a lot of the loan officers that are still in the business have become very, uh, well versed to where.
Yeah, that's kind of like the early 2000s. Like when I started in wholesale, we'd come in and be like, all right, well, before you throw me out, give me something out of the trash can. If I could save it, I could have it. It's kind of like scourging for deals.
Yeah. Some of the ones don't really, one of the niche piece I would say is like the non-QM space still, if there is a niche to the business. Because some of the loan officers shy away from that just because it's not run a DU and get me an approval or run LP and get me an approval and you're done. You actually have to do somewhat of the old school pre-qualification where you got to maybe look at some bank statements. You got to look at, what's working, what's not, and structure it. That's probably the one where I would say you could stand out if you are, well versed in the guidelines of the non-QM. It always helps because the other person they might be talking to might not, or especially if they go to a bank, right? They go to Chase and the Chase says your debt income's out of whack. Well, let me take a look at it. Let me see, maybe they go bank statement, whatever the case might be. But those opportunities would come to you if you were consistent in your approach.
Yeah, so you got these 5 folks that you're hitting up all the time. You gave them a book. You texted them on Friday, have a good weekend. You called them on Monday. How was that weekend? You went to their office. I mean, and you just live it.
You live it. And here's the thing, right? There's something to be said about, hey, I don't want, everybody picks up the phone. You get your credit ran today at a mortgage company and see what happens in the next 3 days. You would be sick of talking to mortgage people, right?
Yeah.
But they're just calling to get your business. They're just calling to get business. It's not necessarily, it could be anybody on that list. There's something about when you say, no, I want your business. I am specifically targeting you. I'm not targeting all the realtors.
Yeah.
For this exercise or whatever the case might be, this campaign. I'm targeting to get your business. So my focus is, how do I get a working relationship with you? And, that's why I say 5 or 10 people, because you're like, yeah, I said that to 100 people. Well, you're kind of just putting them in a dialer system at that point.
Yeah. And, the one thing that, and I don't think it changes, just like reading How to Win Friends, from 100 years ago, right? Friends will work with people that they like. I think it was Jeffrey Gitomer, another author I love. Shout out to Jeffrey Gitomer. Tag him, and we'll get some film to see the podcast. But he always said that all things being equal, people rather deal with people they like.
Right.
All things being not even so equal, they'd still rather deal with people they like. So if you want to get people that are going to, leave you over $500 in closing costs variable, well, sure. I mean, don't develop a relationship.
Yeah.
If you have relationships, look, we can't all control what rates do from a day to day, or even what a company does from day to day. You might work for a company that, through no fault of anything, is priced out a little that day. So your customers should just leave you, and they shouldn't be loyal. So
well, and that's where it goes about building good relationships with your referral partners, because they will understand that, right?
Yeah.
There's probably online lenders out there that you could get a better interest rate than probably any brick and mortar shop, right? But then you better hope they know what they're doing to put your deal together, right?
And close on time. I mean, time is money, right?
Absolutely.
Oh, I got this great rate if you closed yesterday.
Well, that's the risk you take, right?
Yeah.
So you went with the guy that offered you the best rate out in the whole world. You waived your contingencies, your $10,000 deposits on the line, and then they go, well, you know what? At that point, you're going to scramble.
Your bonus income's actually not allowed.
Right. And you're going to scramble, and then you're not going to care about the interest rate. You're going to care about how you could save your $10,000.
Right.
So, the saying, you get what you pay for, kind of, has some value to it at times.
Yeah.
You don't have to overpay, but cheapest is not necessarily the best.
Yeah. Would agree with that 100%.
Yeah.
Oh, what else do we want to talk about today? So, One of the things that I was intrigued by you, I mean, if you don't mind sharing, I mean, you didn't start off in this country, right? So you came into this country, and at that time, you didn't pull up here in a Rolls Royce. You didn't pull up with bags of cash, as people think. And those who don't know, you started in Compton selling cable. You started doing loans. You built a team. You started your own mortgage brokerage. You got warehouse lines. Became a bank. You started your own mortgage company. Started your own wholesale mortgage company. So you've had a pretty impressive, you know, a growth there in about 20 years.
Yeah, I would say I've been blessed. I was 12 years of age when I landed in LAX, and at that point, it was a very, very hard time for my family. My dad had passed away, and my brothers were here. They were going to college, and my mother thought, "Oh, okay. Well, the older brothers are here. He's going to probably get left behind, being the only one." So she's like, "Okay, we're going to pack up our bags and we're going to move here." Luckily, my dad's business was, throughout the world, so he had all the visas and things of that nature to be able to go. So we had our visa to come here, and we're able to make a transition here. So it really started with my mom taking a very difficult step at a difficult time in her life, in all of our lives.
Sure.
But more importantly, that was her husband. I was still a young boy at 12 years of age. Yes, I lost my father, but that was, I was still learning the ropes of life, right? Her life was turned upside down. And she had to move here and for first time in her life, find a job to do at 50 years of age. And we made it happen. We went through the struggles, and I think that's the one thing that probably brings the biggest satisfaction is when you have to earn your way through. Right? When you put in the work, you appreciate it at a different level.
Yeah.
And the hard work that it takes, you're willing to go above and beyond. And that's kind of been the driving factor of this whole thing, right? I saw the struggle that my mother had to go through for our sake, and the whole family. And how could I not go above and beyond after that, right? Like I just knew that I had to do whatever it takes, and having that mentality really just fuels it. You are.
Yeah, well, and you've got a growing, beautiful family as well, and a lot more responsibility. Just stack the responsibility on, right?
Exactly. That's what keeps us pushing, right?
I think the real way to motivate yourself is to take on a lot of debt, right? Have more mouths to feed, buy a new house, help out your realtor partners, So before we wrap up, I just want to ask you, if you were going to take someone today, we talked a little bit about some of your new team, but what do you think of maybe like one tool or app or something that you would give to someone that was new to the business? Anything you're using that might be a good takeaway?
Action plan.
The action plan?
It's not I mean, you could create an app. There's a lot of things.
Do you mind sharing a link?
Yeah, absolutely.
Okay.
I do the old school Excel. We have the Excel format. We put down things, and then we have the completed side. So not only does it help you with your day-to-day stuff, but when you go to business plan, you go to the completed tab and you say, "Hey, we set all these goals this year, and these are all the things we completed," right? Either that alone would be a success or room for improvement, because did you go out and set a bunch of unrealistic expectations?
You learn from that too, right? I mean, that's kind of the good news.
Right.
If you track it, you know what worked or didn't work.
Exactly. So then the next year you could be more precise, or okay, I didn't get to try this, or I didn't get to push hard enough for this. Life happens.
Yeah.
And you make the adjustment. So if I'm starting out today, an action plan where you are writing things down and tracking them will probably shorten the learning curve more than any other thing you can do.
The cool thing is it's 0.00 a month.
Exactly.
You just take an Excel spreadsheet and you don't have to chase the shiny object. Just create the plan,
right,
and follow it.
Absolutely.
Well, I'll tell you what, Cameron, not only just a close personal friend of mine, appreciate all your insights. Thanks for joining us. President and CEO of ML Mortgage Companies, Cameron, thank you so much.
Thank you for having me.
Take care, bud.
You too.